A very good afternoon to you. Let's get into the markets. Asian markets edged up in today's trade, buoyed by the fragile ceasefire between Israel and Iran. The oil price falling quite sharply and talk of lower inflation levels, with the US Fed Chair Jerome Powell indicating some room for more rate cuts, also helped to boost sentiment. The Nikkei share average closed up 0.4%. The Hang Seng Index advanced by 1.25%, while the Shanghai Composite Index climbed 1.04%. US markets ended on a higher note yesterday, driven by the tentative Israel-Iran truce, with investors also listening out for Fed Chair Jerome Powell's testimony to Congress to get a sense of policy direction. Powell indicated that if President Donald Trump was to revise his tariff policy to a more favorable outcome with the US's trading counterparts, the decision of which is due on the 9th of July, that could help to create more room for interest rate cuts for the balance of the year. The Dow Jones Industrial Average advanced by 1.2%. The S&P 500 gained 1.1%, while the tech-heavy Nasdaq was the best performer on the day, up 1.43%. Looking at the local indicators, we see that the all-share index is currently trading down 0.4% at 95,459 index points. On the currency front, we see that the rand is trading at 17.75 against the US dollar, 20.60 vis-a-vis the euro, and 24.16 against the British pound. Gold is trading at $3,326 an ounce, platinum at $1,304 an ounce, while Brent crude oil is trading at $67.64 a barrel. All right, let's get into conversation now with Zwelakhe Mnguni. He's the CIO, the Chief Investment Officer at Benguela Global Fund Managers. Thank you so much for joining us, Zwelakhe. So markets all round appear to be quite cheerful, except our local market now is in the red. It was a bit up earlier, especially, of course, following what we still describe as that fragile ceasefire. But even as markets normalize, is there more room to for us to see all-time highs, particularly on the US markets, which are already quite high in terms of valuations?
I do think that there is room for markets to go higher. I think the situation in the Middle East threatened stability, and with that being under control, at least as you said, fragile as it may be, I think it might give us room to see continued performance in the market, and we're back on the economic issues. Interest rates, inflation, and economic growth, those will be the big issues driving the markets going forward in earnings.
So if Trump does come to his senses and does away with his reciprocal tariff idea come the 9th of July, what will this mean for gold? I mean, does it still have the potential to shine?
Absolutely. I think gold has got a long-term structural underpin in that the central banks are trying to diversify away from the US dollar. Particularly India and China, the biggest buyers of gold amongst the central banks around the world. But I do think that we might see a pullback as the uncertainty premium gets from the gold price.
So like the Fed chair has been giving testimony to Congress on monetary policy. What are some of the key issues that came out for you, and how might this translate for us here in South Africa, especially obviously after that oil price scare?
Yeah, I think the fact that he didn't give any guidance around rate cuts. I mean, I think the environment is looking positive for him to cut rates at some point, but he wasn't committed to any timeline. I think more importantly, he seems to be confident that the growth will continue, the US growth will continue, but it would be at around 1.4% rather than 2% that was expected earlier in the year. So I think he feels that he needs to watch the tariffs before he could actually move to a point where he can cut the rate. So your point about Trump coming to his senses, I think that would be quite relevant in that situation.
Yeah. So, of course, oil has been all the trend this week and even last week with the speculation around what was happening in the Middle East. And Sasol benefited from that very brief increase in the oil price. but now it's suffered quite a fall, falling 13% yesterday. What is the sort of future for Sasol? What are its fundamentals? How is it looking?
And I think if there's anything that we can take away from this experience, is that Sasol is highly geared to the oil price. If the oil price goes higher, I think Sasol does very well. But what they're left with now, with the threat of the Strait of Hormuz being closed, being taken away, I think what they're left with is the operational execution back to fixing secunda, back to making sure that their chemicals portfolio is aligned to the demand on the other side, and they are not playing in the overly competitive space. I think the balance sheet remains a big issue, but I mean, it's a big company. They generate 50 billion in EBITDA. I mean, it's quite a big company. So they should be able to weather the storm, but it is quite a volatile market for them.
Indeed. So, Welake, thank you very much for your time. As always, that was Welake Mguni. He is the Chief Investment Officer at Benguela Global Fund Managers.